Order! Order! You are an incorrigible delinquent at times. Behave yourself, man!
Now, interest rates are already at an all-time low, but NatWest is warning business customers they could be facing negative rates, which would mean they'd have to pay to deposit money. The Bank of England is now expected to cut rates next month to try and boost the flagging economy. But does this mean you'd actually be better off putting your cash in an old sock under the mattress? Our business correspondent, Helia Ebrahimi, is here. Helia, the obvious question first, why is this happening?
Well, look, if people hoard money, it's going to produce the exact opposite effect of what the Bank of England is aiming for, i.e. to stimulate the economy. But the RBS warning has to be looked at against the backdrop of what's happening internationally with central banks. And remember, today is the 4-year anniversary of Mario Draghi, the president of the European Central Bank, uttering those words, "We will do whatever it takes." The problem for today's flagging economy is it's not clear central bankers have that big bazooka left, and what they're experimenting with is negative rates. And you can see that it's gone negative in Europe with the ECB, in Japan, in Sweden and Switzerland. And the idea is that you make it expensive for retail banks to park cash with the central bank, and they might lend it to consumers. But this is a very new economic experiment.
Well, can you then tell us how it will affect customers?
Well, as you said, RBS, which also owns NatWest, wrote to 1.3 million business, not retail, business customers, saying that we reserve the right to pass on any cost of negative rates to our customers. And understandably, a lot of companies around the UK very anxious about this.
Well, so they've written the letter, but is it actually going to happen?
Well, next week we're expecting the Bank of England to cut rates for the first time since 2009. Big move. But we're expecting it to go down to zero or just above zero. We know that Mark Carney doesn't think there's appetite in the UK for negative rates because it cuts the interest, the profit margins for banks and especially building societies. But the problem is, post-Brexit, there's a confidence issue. You know, we had a report out today saying that business lending has fallen by about £2.5 billion. And on the mortgage side, approval ratings have gone down to the lowest level in 15 months. Ernst & Young said this week that profit warnings from companies had been issued in the last 3 months more than any time since the financial crisis. So the Bank of England has to act decisively, but I don't think they're going to bring in negative interest rates quite yet.
We'll hold you to that prediction. Helia, thanks very much.
I've been